Welcome, everyone, to the Kendall Report. It is Monday evening. This is a broadcast for Tuesday. I know I'm all over the boards. I keep changing. I do 2 weeks of the morning, and now we're back in the evening. We're going to go evening until I go on break on the 16th. The final video will be Thursday, the 15th, Thursday evening. So you go back to the evening broadcast. So tell your friends. I'm getting harder to find. I'm really disrupting his channel. I'm not very happy about some of these changes, but I did them for business reasons, and some of those reasons are on hold. So here I am. This is actually the best time. So hopefully all the European audience and Asia will appreciate me being back. There's not a lot of viewers, but it doesn't surprise me at the moment. So hopefully everybody will figure it out by the time we get into tomorrow morning. So let's get into tonight's video. I have a number of things that looking at yesterday's decline was pretty substantial, and it was relentless. And it was very interesting because we were in the live room. It was projected to be weak for at least a couple of days. We did, however, get an STX buy signal. I'll go into that in more detail here in a few minutes. But the bottom line is what we're seeing here is really a consolidation of the rally that we saw earlier. I wouldn't be getting too bearish. There are some possibilities I'll cover tonight as far as where this market could go. But for right now, I'm just going to tell you that we're in a sideways configuration, and I'm going to go through some of the algos and things that I normally go through. So before we get into the economics, there's a fair amount of economic reports coming out on Tuesday. There was zero on Monday. So everything was based on, possibly the Chinese situation. So I'm going to put on a tinfoil hat for a minute because I've been thinking about this a while, and I think I've mentioned it before, but I think anytime you hear zero anything, COVID zero in China, listen, this is a smokescreen for what's really going on in China, which is the economy is just completely collapsing. And I believe coming into the party Congress where Xi Jinping got another term, I think this was all part of the strategy. And I know that sounds like a little conspiracy, but seriously, zero COVID, you can see people are starting getting really crazy, especially probably Apple is the most, I would say probably the most vulnerable here. And there was somebody in the live room that mentioned that they had been at the Foxconn facility in China and said it was a city in itself. So it's very interesting. People, meaning human beings, no matter what nationality you are sick and tired of all this stuff that's going on with these draconian type rules. I just heard there was breaking news on Bloomberg right before I came in. South Korea is actually having a trucker strike going on there. And we're looking at the president of South Korea comes out and is trying to order people back to work. Whether it's going to work or not, we'll see. But it's very interesting, this whole thing that we see from China to you name the country. It's interesting that the transportation system seems to be the best, I guess, battle to fight. We're sitting here with now Congress is going to get involved with potentially a rail strike here in the U.S. So we're just seeing everybody starting to revolt over all the BS that has been going on for too long. And I think folks are getting really sick and tired of it. And I think possibly that Congress is going to step in. So you think about this. Biden was supposed to be Mr. Union, and now they're intervening. They're not letting the unions take care of themselves. So because now they're going to step in and force the unions to do something. And Biden's washing his hands over and go, Congress will deal with this. And I saw people on both sides of the aisle this afternoon talking about this. And it's absolutely, do we need a strike? No. But listen, people need to understand that there are some serious issues going on, and people in general are sick and tired of what's been, I guess, implemented against us. And the Great Reset, all the stuff that we know that's going on. Next they're trying to throw together some CBDC stuff, which is a central bank digital currency, and social scores. There's a major war. I was just reading, I retweeted a Elon Musk tweet that said, this is a battle for free speech that's going on. Apple talking about taking Twitter off. I mean, this is getting crazy, folks. So this is really, this is a serious battle. And every time you think, okay, things have stabilized a little bit, then we get all this stuff. So I'll tie all this together. I already told you I was putting a tinfoil hat on. So what's happening, all this disruption that's happening across the board is really a smokescreen for something bigger. And they're going to take advantage of this stuff if we don't pay attention. So please pay attention, and everybody do their part, whatever that means. I'm just saying that we need to speak up and be heard. And this is, no one's covering anything that's going on in Brazil, and it's crazy down there. I have a friend down there that keeps me in Sao Paulo that is keeping me in the loop, and it's absolutely crazy and not going away. So going back to the whole Chinese situation, I think it's a smokescreen, because the housing, we know everything's off the rails there, and if they press it too far and the unrest gets to the point where maybe it really gets mass unrest there, then that could become a problem to supply chains and everything that's going on, folks. So we could get super bearish again. I still am looking at, I'll go through in just a minute, the live stream from the standpoint of, we'll go through the database and cover all those things. Database still looks pretty solid in spite of today's decline. It didn't really respond on a short-term basis. I thought we might see some things. We'll get into that in a minute. Let's talk a little bit about economics that are coming in for tomorrow. We did basically housing. We got Case-Shiller coming in, expected to be at 10.4 year over year. Last month, the previous was 13.1. So we're seeing a cooling of some of the housing, but housing has just been completely destroyed. You're down anywhere from 30 to 45% on almost every region in the country right now, from as far as sales volume, and the housing is going to be the leader in all of the things coming forward in the economy. The question is, will it spread, or will there be contagion? Because really we're looking at, they're not really building that many houses. They still are getting permits, but the housing building side is starting to slow down. And when that hits a wall, that's going to be incredibly interesting there. So, I think this, like I said, I'm just going to go, you've got a country of, over 1.3 billion people, and there's, 20,000 people with a cold, and you're shutting the country down. There's something else going on there. Just like we knew all along on many of these other things that are going on. So let's go ahead. Let's get into the database. We'll get through this stream as fast as I can. Quite a bit to cover. So let's go ahead and get into Wavetech. All right. So as I told you just a second ago, we're looking at the database hanging in here at 82.89. It actually upticked just a little bit. We had 150 buys, 100 sells. So a slight uptick, nothing material. But on a day where we're down 1.5%, almost down 2% intraday, you would have thought that more things would have got destroyed. As I talked to you about this morning, I'll go through it again. The actual prints on the sectors are all positive right now. There's no losing sectors at all at the moment on the short-term basis. The longer-term intermediate, I'll go over there for just a second, is at 36.20% bullish. We need to get over 42. I keep showing you this screen. I'm going to keep punching this around just for a little bit just because it's important to understand what this 42% really means, is that is the point when the database gets above that level that we see an extension. Now, this was the previous rally coming from 2020. Doesn't mean it will be like this, but what you do get is an extension, and typically anywhere from 100 to 150 days going forward will be the expectation for the markets to continue to have a positive event. And as I've been talking about for a while, that this database has driven my career and many other investment advisors going back to 1998. I originally built the first models and the portfolio manager in 1996. And so this is something that I live and breathe all the time. And when I see this type of action, this tells me that there's something going. Now, we haven't printed 42% yet, but once we get there, that's going to set the clock turning forward, where there's at least, and when I talk about 100 days or 150 days, those are market days, not calendar days. So that puts us into 6-8 months is really what we're talking about. So if that's the case, this will carry us into the well beyond the first quarter of 23, maybe in the second quarter. And you folks know this, the economy is not the market, and the market is not the economy. That what folks are going to be looking at some of these metrics and this rotation that's going on. And I'm still working on a project. I suspect there'll be a video after the first of the year on my secret project that I'm looking at. I'm still evaluating the probabilities of things going forward, but it does look like there could be a really good thematic type play. If you go back over the last couple of years, we had energy as a major play coming in November of 2020. It got reaccelerated this year. It's the only thing that's worked. We're starting to see some of the luster come out of like ETFs like the XLE and things of that sort, but we're still way up there. And as long as crude, I'll cover crude here in a few minutes, but as long as crude stays above $65, these companies are going to make a lot of money. As you notice that some of them are starting to just get some profit taking today. But I think all this stuff as we go forward is going to be more of a sideways, more of a rotation to happen, both in the database as well as many of these strategies that we present out to our advisory and our institutional community. All right, let's start with the S&P. And in tonight's stream, I will go through the dollar. I think there's some interesting things going on there. The configuration here as we trade just below the 200-day, the 200 days at 40.25, the 40-week is at 40.30. I covered that in this morning's video. But the algos are suggesting basically stability. So we're still going to have the 10 kind of going sideways here around 39.87, probably drop just a little bit. The 21 period is at 39.15. That's going to be your main, what I call a demand line. That's going to be where you're going to have the buying opportunities somewhere between 39.60.40 down to 39.14. If it does not hold those levels, then the ultimate extreme would be down to the fib target 1, which is 38.27. That's this red dots that are here on the page by my cursor. That also comes in at the 40-day moving average at 38.28. I actually don't see us getting down into that range. We could print down around the 39 handle. Could see some further downside. As I mentioned in yesterday's action, we got an STX buy signal. So yesterday, the STX was at the extreme 39.89. We closed at 39.70. So we got that buy signal. Suggests that we go sideways for 1 to 2 days. maybe we resume, but the algos are also confirming just that action. If you recall, going back last Wednesday on the stream that I did Wednesday morning, I was talking about that Wednesday was being projected to be the high of the sequence, and that's been the case. But we're also seeing something else happen here, that the Wavetech 200 and algo is suggesting we're going to see more improvement. What that means is we're going to see the 200-day flatten out, and it's going to become more vulnerable to a penetration to the upside. So we did trade 1 day above it, but these Fibonacci projections on the upside are still valid at 42.59 is the min. I'll leave it there. But basically 42.59, 4,400 is still a valid possibility here. We're just a few days from starting the final month of the year and the end of this fourth quarter, and there's just going to be a lot of window dressing that's going on from that standpoint. And one of the things I didn't mention earlier, but I'll cover it when we go to the 10-year. All the Fed talking heads, everybody was out there. Brainerd, Williams, everybody was talking today. And then we got Powell on Wednesday is going to be out there talking as well. So they're really working the circuit, so to speak. But the algos are suggesting stability here for a few days, suggesting that there's a high probability that we'll stay above the 21 period moving average. It's at 39.15 right now, and it is rising only about 3 to 4 handles per day. So that'll be around 39.20, 39.25, and so forth. So somewhere between 39.60 and 25 should be at least where we start to stabilize. And I know I talked about this last week, where it's a classic. You know, you buy 31, sell 20 on the VIX, and that trade just keeps working. And once again, that's exactly where we went. When we got to the extreme, we hit, I think, 34 handle on the VIX, and then we printed at 20 just the other day, and we've been backing off ever since. So you go back into last Tuesday, Wednesday, and look at the VIX, you'll see that. But that's like investing made simple, right? It actually continues to work, and it's worked for the last couple years. It's not just something that just kind of popped up recently. But the patterns that are here on the dailies are suggesting we're going to have some sort of continued pullback, but we got the STX buy. So look for at least 1 day sideways. That's what maybe we're getting right now at the moment. We're looking at trading at 39.75. We look at the market grid for today, and I'll just bring it up. It's on the far side. I don't have it loaded up for the on TradeStation right now, but the R1 is 39.80, so we're getting pretty close to printing at that number. S1 is 39.60. So far, what we've seen is 39.69, 39.76. So we're trading between S1 and R1. Look for a potential for an R2 print, be 39.91, and then R3 is 4,002. And if you were on the live stream this morning when we came in, the algos were suggesting that we're going to see a pop off the opening. And I told you somewhere around 08, we printed as high as 40.15, and that was it. It was straight down for the rest of the session. I'm just going to bring up the hourly here, since we've been used to seeing that in the morning. The hourly suggests that over the next couple hours, we'll start to see some positive movement. We should get up back toward the 200-hour possible. Watch the simple 21 on the hourly chart, and that right now is 39.90, and it is declining about 2 handles per hour. So that's going to get us around some of those daily numbers I just talked about as far as the market grid goes. So look for that as a configuration. Thanks, Wayne. I don't know what happened to the sound. I apologize. The scenario, what I was talking about here is that we're getting one of these, what's called a veil top on these, on the Wavetech webs. And when that happens, if we don't get crossovers in the next couple of weeks, what we're going to see is that the pattern is going to be interesting. I'm showing that it's broadcasting sound. Wonderful. Let me try changing pages. Is there any sound now? Yeah, it must be that page that I was on. Sorry, folks. On my system here on the software, which is an OBS, it's showing that it was broadcasting. Everything was fine. So I'm not sure what happened. Okay, I am so sorry. Everything was fine. Not sure what happened. Yeah, rewind. What's the last, everything from NASDAQ? Are you serious? Is that what happened? Yeah, so let me know if, let me change to another page and see if this works, okay, to make sure we have sound. So are we still hearing sound when I'm on this page? Yeah, just, oh man, I don't know if I can do that again. I have no idea what happened. On my screen, because I can see that I'm broadcasting, folks, and the meter's running like normal. So I have no idea. Yeah, it was definitely Putin's fault. All right, here's what I'll do. So I did NASDAQ and the Russell. There's not much on the Russell to talk about. I'll go back and do NASDAQ. Okay, so we'll rerun NASDAQ, just a quick overview, and then I will do the 10-year because I think there was some interesting things there. So yeah, I'm not sure what's going on. And once again, thank you, Wayne, for Skyping me on that. Appreciate it. All right, let's go back. Let's try this. I'm going to even go official here. All right, we have sound. Just confirm I have sound here. Thank you. Thank you, Kai. I appreciate it. So just let me know, because this is the page I think I was having trouble with. All right, I have no idea what's happening. So it's the same way it looked before. So we'll go ahead real quick, folks. Sorry about all this. So what I was talking about on the NASDAQ is the algos are suggesting more sideways, just like with the S&P. We do have upward projections starting to come into play. And all of the algos, after a couple sessions here, are suggesting that we're going to see some improvement, and we should stay above the key moving averages here in the pattern, which is 11,364 and then 11,466. We should hover above those and ultimately see things start to turn up a little bit. And this is the daily chart, so that'll carry us through. As far as we did not get an STX buy signal like we did on the S&P futures, so we'll go there. So we're going to the back to the interest rates here, folks. All right, just I'll watch the screen to make sure you guys are getting sound, but because this is exactly how it looked before. All right, so the 10-year, like I was saying, is there are some potential for the 10-year to print down as low as 3.25, which sounds completely crazy. But for the most part, right now on a daily and weekly, it looks like we're going to stabilize here. We printed 3.68 yesterday, and it looks like we'll probably rebound back around to the 390 level, maybe 392, and we should just stay in range bound here. And I think until we start to get into what the Fed was talking about. So let's try this again. So what I was talking about is all the Fed talking heads were going on and on today about raising rates. There's a concerted effort for the Fed to talk these rates up. So what I was talking about is on the yield curve, we're probably terminal rate somewhere around 375 to 5.25. The 13-week, the 2-year notes will stay elevated relative to that number. And then everything after that, 5, 10, 30 will all be much lower. And like I said, I've got potential projections now on the 10-year down to 3.25. I think there'll be a little hookup on the 30s. They won't get as low. But all that has to do with the demand. And when I was talking about housing, hopefully you heard that. That's really what's affecting the back end of the yield. And I've talked to you about this before, where we're really seeing the potential for the demand destruction just to continue and see those back end rates, primarily 5 and 10s, will be under pressure the most. And it's interesting because I think, we still have QT going on out there, which is even more interesting. I think at some stage to stabilize the markets, whether it's here at 360, 3.25, 340 is another target range, is that the Fed will start selling the 10s and stabilize that market and start jacking around with some of the spreads as well. So we'll see how that all plays out. They've got a lot of securities to sell, and it's going to get pretty interesting as we go forward. All right, back to where I was before this sound issue happened. So we're looking at the Dow here. Dow, I think, is bottoming right around this 200. I don't see any big rallies anymore. I'm going to touch on a monthly here in a minute so you can see that. But the algos are suggesting stability to the upside, probably staying under the 21, 108. I'm going to go over to the weekly because that was something I was talking about that I want you to see, is the 10-week moving average, not this week, but next week will cross over the 21, and that's typically a short-term low. And we have this rising 40 in here. The 40 is still up at a 0.23, which is trend mode. So that's where we're stabilizing right now. That number is at 105.65, low 105.32. So we should stabilize in here, but stay below the 21 and 10 period moving averages, at least for the next week or so. So look for some stability. The risk of, when we were talking about the Japanese yen at 151 and all that, that's, no one's talking about that stuff anymore. And so everything got saved just in time. And there was a lot of intervention by just about everybody. We had the BOE, the BOJ, we had everybody was in there selling anything and everything they could to control their currencies. So we definitely got, that was a pretty interesting effort. And once again, the central banks are all working together on all of these things. Okay, let's Let's cover crude oil next. All right, so crude has traded down just about to the fib target 2. That number is 71.76. We printed 73.60. We're back at 77.34. The algos are suggesting at least sideways on the 10 and 21, but they're still negative. So there's quite a bit of downward pressure above the markets at 87. And you can remember when I was talking about 86.92 range. I've lowered that now. It looks like we're going to go 71.82, maybe 84 top in. It looks like just more sideways, more drifting down towards this 200 period moving average, which is all the way at 65.76. We'll find out if these guys are going to buy back the SPR at 70, like they said. So there's probably going to be some stability if that actually happens. And I suspect they're not going to announce it. They're going to do these trades as quietly as they can from that standpoint. Just a real. This is the weekly chart we're looking at, by the way. So this intermediate trend is likely to hold definitely above that fib target 2, which is at the 71 handle. I think it'll stabilize here from that standpoint. I want to go over to the monthly, and we're printing. This is for the month of November. Let me get you the number here. The STX number is 73.25, and we printed 73.60. So we printed at the bottom end here. We also have a 200-month moving average coming in at 72.75. And algos here, though, are suggesting, this is monthly now, are still lots of downside. And what that really means is we're going to stay under the 10-month moving average. That's a 95 number. That's what I was just talking about, going up to that number there. And then, so we should, I think, rally back above 83 handle and then trade in a range bound here. And what we should see, because we just got a couple of days left in this month, when the monthly chart gets updated, we should see the market grid turn down. So that will give us some pretty strong potential around that 72, 71, which is multiple numbers down at that level, and 65 is the extreme on the downside. We'll see if these guys start buying anything or not. I think we'll cover gold here. I think we'll stick with this monthly chart. We got really a pretty nice trade going on here. And I'm glad I stumbled onto this because I hadn't seen this earlier. Last month, we had a low for the month of October of 1621. This month, we had a 1618. Last month's high was a 1738. This month's high of November was 1791. So we have an outside reversal bar. So as long as we stay in that upper end of this range, and I'm going to say right now anything above 1728 is going to be very positive here from the standpoint of this monthly chart. So I've been talking, and what's interesting is the algos are suggesting that at least some of the downward pressure is going to start to dissipate and stabilize here. So we got a ways to go. Let's back up to the weekly chart here. And weekly, we got up toward some of these on a weekly basis. The R1 number was 69. So far, we've seen a 63 high. The S1 number is 38. and we've had a 38 low. So far on a weekly, we printed the R1, S1. I do believe we'll stay over 1720 on gold. The absolute extreme on the downside is 1700. 1701 is a number that's down there. We should continue to consolidate for a couple more weeks, but it does suggest that the 10-period moving average is going to continue to accelerate underneath this market. So it's 1704 right now. So we'll look at that number is going to start to accelerate. It's up about 10 or 15 bucks per week. But this is ultimately probably going to be a really big trade from the standpoint of this pattern that's unfolding, especially seeing that monthly reversal that we just covered. All right, go to Bitcoin. I'm kind of burned out tonight after going through markets in silence here. So hopefully folks will get beyond that point and be able to see the presentation on these other markets. Still looking at some massive, I talked about this morning. This is the final shot of any kind of stability. Next week, coming into Sunday night, we're going to have a pattern that suggests that we're going to break this chart down. I mentioned in the video earlier is we've got, if I go to the daily chart here, this is weekly, we do have some potential. Let me get this scaling right for you. We do have some targets to the downside right now to 10,821. So there's some, but the algos on the daily are interesting enough, suggesting that we have some stability for a couple more days. So it looks like toward the end of the week, then this thing will maybe start to break down. We'll see what kind of numbers come out of here in the next couple of days. I think the crypto space, as I mentioned earlier, I mean, everything is so messed up there. I'm not sure there's much hope for market sentiment, and everybody's just waiting for the next shoe to drop. And I did see some folks talking, especially people that are too close maybe to this market, are talking about they think the contagion's over. I'm not sure that's the case. I think there's still a lot to unwind here, because the way a lot of these financing sites and things were working, they've definitely got a bunch of broken links in the chain, pun intended. So I think it's going to get interesting, and everything that's going on with FTX and SBF, all this stuff, it's just, it's just kind of a crazy space. As I mentioned this morning on the stream, there's some good Twitter spaces going on out there, and some of them you'll know right away when you start listening in if it's a good one or not. There's been some pretty crazy ones. I know Musk and a whole bunch of people have been on some of these, so it's somewhat interesting. I know some people might think that Elon's going to save Bitcoin, save crypto. I'm not sure. I think he's got his hands full dealing with what's going on with Twitter. I think it's very interesting. I saw somebody asking, is Twitter about to go bankrupt? And I think not. So I'll come back on screen here. I'm going to call it quits. Normally, I'll tell you what, tomorrow night, since things got screwed up, I'll cover a couple stocks in tomorrow night's video. I'll go through some stocks. Was going to do some. I had a list. Not going to be able to do that at this time. It's just not enough energy left. This is 2 streams one day. So anyway, plus I was in a live room for 3 hours. So it's been a busy day. I appreciate everybody hanging out. I guess everybody will figure out I'm back at my normal time. Tell your friends, spread the message, and all that kind of stuff. Yeah, that's okay. No advertisers. So they're going to figure out something, by the way, on the whole Elon Twitter thing. They're going to figure out that's where all the bodies are. There's going to be, I think they've already increased the users. He'll be probably successful at buying the blue checks and all that stuff, be able to replace a lot of that revenue. I don't know what happens after once everybody gets on board with that. He's going to come up with some innovation. And I saw somebody talking about that some of the things that he's implementing, like maybe doubling, going to, I forget how many characters, 200 and some, upping the characters, doing some other types of things, or things that the previous employees came up with. And I'm sure there were some good ideas flowing around there. And I don't think anyone said there wasn't. And so, of course, he's going to use that stuff. But anyway, we'll see. The fight for free speech goes on. Like I said, be heard and pay attention. That's all we can do right now, and make sure that our voices are being heard the best we can. I know we're just one voice, but like I said, there's a lot going on. So good luck, folks. I'll see you tomorrow night, same time, no morning. I'll put some stuff out on Twitter to remind everybody that I'm not going to be live in the morning. So follow me on Twitter. It's expert, no E in the expert. So I'll talk to you then. Have a great evening. Eric, TradeStation, you can hook TradingView directly to it. Yeah, all you have to do, like someone just said, there's a list of all the brokers that you can deal with. And if you hook up TradeStation, you can actually get the level 2 to work as well on TradingView. Thanks, everyone. Tell everybody you know we're doing evening again. Thanks a lot. I use Streamlabs. Anyway, talk to you tomorrow night.